Yes, guys, welcome to today's episode. Today, we are going to be talking about true market structure. We'll talk about protected highs and lows, true break of structure, and change of character. Because there are many ways people have been saying, okay, this is how to mark market structure and all those type of things. But most of the time, we get lost. For an example, they say market structure goes like this. Like this is how the market moves. But this is far from the truth because this is not actually how the market moves. Instead, you're going to be manipulated and you're going to see things like this. You're going to see things like this, things like that. And that's truly how the market moves. It doesn't move straight like this. If the market moves straight like this, everybody will become a millionaire, everybody will make money and become a millionaire. That is not how the market moves. Therefore, now we are going to talk about how the market truly moves and how we can be able to identify those moves by ourselves. So let's. So first things first. First things first. Um, the market moves this way: creates a high, creates a low, creates a high, creates a low, creates a high, creates a low. This is the subjective way of looking at the market. We have to be as objective as possible. In the strategy I trade, I try to be as objective as possible. But then this is the basics, and we need to understand that this when the market moves and creates a high, this other high, this new high that was created here is higher than this high here. Therefore, this high will be called the higher high. So market moves, creates a high, creates a low, creates a high, creates a higher low, creates a higher high, creates a higher low, and that's how the market moves. So when we are trying to map our market structure, we want to identify the lowest point that caused the break of structure. The lowest point that caused the break of structure is what is going to be identified as our higher low. And the pullback is going to be identified, like the top of the pullback is what is going to be identified as our higher high. For an example, let's take in this particular case, this will be our low, this will be our higher high, as I've said. So let's take a scenario whereby the market moves like this. The market moves this way. Let's take a scenario where the market moves this way. All right, cool. Market moves this way. Now let's take where the market moves this way. This way. How are we going to identify the structure here? How are we going to identify the structure here? Now in this case, this is our low. Our low here formed a high. Yes, and it came back, formed a higher low, which now formed what? A higher high. Now the market came back here and broke this particular higher low here and formed a new higher high. Normally people will mark this place here and call it a change of character, but it is not a change of character. It is not a change of character if we want to look at it in the objective manner. Therefore, our new higher low will be here. This new higher low will form this higher high. This higher high came back, went again. If you notice, this particular low did not break structure, and this is not the lowest low. Instead, it went and came back here and now moved to break structure. Therefore, this will not be our lower low. This will not be our higher low. This will be our new higher low. Not this. This will be our new higher low. This one now went and broke structure. So this is the objective way of mapping the market. Now, the next thing we are going to look at now is the protected highs, protected lows that I talked about. Now, protected high and protected lows is just talking about where we don't expect the market to break at a point in time, where we don't expect the market to break, where the market will be protected. For an example, in an uptrend, markets can be in an uptrend, a downtrend, or ranging. In an uptrend, market makes series of higher highs and higher lows. In a downtrend, market makes series of lower highs and lower lows. Therefore, in an uptrend, the higher low, every new higher low that is formed is expected to be protected. Therefore, in this case, for an example, as market has broken this structure, we don't expect markets to come and break this place. If markets break this place, there is a possibility that the market is about to change character. A change of character is just how the market flows. A change of market structure is the change of character. For an example, if market moves from printing higher highs and higher lows to printing lower highs and lower lows, we have said that the market has changed from um, uptrend to a downtrend. Do you understand? So that's how it is. So now let's go to the chart and see how we can map market structures by ourselves. So I'll delete this and remove. Now let's look at this is Euro USD. This is Euro USD. This is Euro USD. So you see from here, this is the lowest low. This is the lowest low, and this is the lowest low. This was the previous high, and this was where market broke structure. So this is the lowest low that formed this high. If you look at this low here is lower than this low. Do you get? So this will be the lowest low. We can mark it as a new high because this is a high, but it's not a new higher high because there was no break of structure. Now a break of structure happened here, therefore this one formed this high. Do you get? In cases like this, I just ignore small things like this, I just ignore them and count them as just one leg. Now market came back here, but this is not the lowest low. Look at where the lowest low is here. So therefore this is a new higher low, forming this new higher high. You get me? If we come down again, you're going to see that this was not the lowest low. Instead, look at where the lowest low is. Therefore, this is the new low, and we expect the market to form a new high. Yeah? Let's see how it goes. Exactly. You see what I'm telling you? See what I'm telling you? This is how to mark market structure in an objective manner, and which is the best way to look at the market. This is a new high. You get me? Which formed a new low, a new high, a new low, a new high, and that's it. This is how sorry. This is how to map this is how to map market structure in an objective way. This is how to map market structure in an objective way. Now, some people might ask, what of all these ones inside here? What of all these ones inside here? In market structure, there's what we call the major structure, the minor structure, and the substructure. Now, the major structure is this major ones I marked now. Those are the major structure. The minor structure is when we go to the lower time frame. If we go to the lower time frame, we will see that in each leg, there's what is called market phases. Market has two phases, a push phase and a pullback phase, or an impulse phase and a what? A rejection phase. An impulse and a rejection phase. Market has two phases. Therefore, in an uptrend, this push here is the impulse phase or the push phase. This is the pullback phase. So you understand. So remember when I said that that protected lows are the lowest low that caused the break of structure. If we look at here, we notice that no low has been violated. No lowest low has been violated. If we look at, do you understand? Therefore, these places are the protected lows. Once or point of invalidation, once price breaks any of this low, do you understand? We can say that okay, the market is now trying to do what? Like reverse. There is now a change of character in the market. So that is that about that. So the next thing I said we are going to talk about is how to mark a true break of structure and how to mark a change of character. Okay, nice. Now in every time frame, things has to be objective and you follow that time frame. This is the 1 hour time frame of Euro USD. Therefore, if I am to mark it now, I said this is the protected low. Before a change of character happens, the protected low has to break. The protected low has to break. And the main structure, for break of structure to happen, the main structure has to break. If the main structure does not break, then there is no break of structure. Remember I said there is a main structure, there is substructure, there is minor structure. Minor structure is the one we see on the lower time frame. Maybe if we go to like the 5 minutes or something, we'll see the minor structure of this particular move. Because if the market moves like this, for an example, this is the push phase, this is the pullback phase, this is the push phase, this is the pullback phase. If we go to the lower time frame, we will also see that in this push phase, there is a full-blown trend here. There is a full-blown trend here in the lower time frame. A full-blown trend inside here in the lower time frame. You get me? A full-blown trend in the lower time frame. You understand? Let me make it black. So the black one is the lower time frame, the blue one is the higher time frame. So this is what it is. But then these other ones that we can still see on this main time frame here is what is called the substructure. So the break of the substructure is not a proper break of structure. A proper break of structure is when the main structure, the main highs have been broken. So in this particular case, we won't come and mark here now, this particular place. See, the market moves up, came down. We won't come and mark here as a break of structure. This place. We won't come and mark here as a break of structure on this time frame. It is not a break of structure on this time frame. Do you get me? So let's now mark all the break of structures as we are coming. You get me? Yeah. So this is where market broke structure. This low is where market broke structure. So this will be the break of structure. This will be the where market broke structure. So let's label it as VOS. This will be our next break of structure. Remember, this is not where the market broke structure. This is not where the market structure. This is where the market broke structure. So this will be our next what? Break of structure. So that is it. So in an uptrend, you should be looking for long opportunities. So when we wait for the market, for an example, to pull back, say you get me, we would know that it's not supposed to break this low. We can use our Fibonacci tool for an example and draw maybe from the low to the high. You get, and wait for market to come to the what? Below the 50% before we can look for buy opportunities to go up. And this is just how you should be looking at the market. Now, a change of character is when, let me show you change of character now. Let me show you change of character that happened in Euro USD. So if you look at here, the market has been delivering bearish. Do you get me? Market has been delivering bearish. So market moves like this. This is the low that caused this place here. This is the break of structure. So this high, caused this low. There was a pullback here that caused this low. This is the break of structure that caused this low before the market continued coming as if it wants to pull back, but then it changed character. And if you see, as it changed character, market started a new trend started. So look, is where we are going to mark our change of character here. This is where we are now going to mark our what? Valid change of character. This is where we are going to mark our valid change of character. And I hope you understand it properly. For you to get it properly, you have to go to your chart and test it, look at it, try to know if you can mark it by yourself. If you found this video useful, don't forget to like this video, and subscribe to my YouTube channel because I'll be dropping more videos like this to help you become a better trader and to help you become profitable in the market. See you in the next video. Peace out.